as balance sheet. The ins and outs of money, cash flow, tell us where we are and to some degree where we have come from, especially when you're talking about investment, capital, in terms of money raised in the case of PBOs. And it's very two-dimensional in the sense that one side always equals the other, and if it doesn't, the accountants and the auditors like KKCO will be quick to tell you that there is definitely something wrong. So of course, double entry accounting is what has been built out of that accounting equation, making sure that almost in a Newtonian sense, that every force has an equal and opposite force. And so we are obsessed with balancing and making sure that all entries align at the end of the day. So around this, we have, of course, built certain tools, things like journal entries, day books, ledgers, that all feed into reports like trial balances, income statements, balance sheets, which of course the bank will very quickly ask you for whenever they want to assess your loan worthiness and so on. And of course,
Chris, I have a concern about your presentation not being seen by majority of teams. Are you able to load again? Reload. Yeah.
Let me reload it. Yes. Is it that we are on the previous slide, or that the presentation is not visible at all?
The majority of response is saying they're not able to see the presentation entirely.
Okay. Let me stop.
But I can see it from my end. I'm not so sure why. Just try to reload one more time.
Sure.
I can see it. So just confirm, team, if you're able to see. If you're not able to see, just let me know again, maybe on the chat. Then as Chris proceeds, maybe we can see how to address it. I think I've gotten thumbs up from majority of teams who are able to see it. Proceed, Chris. Apologies for that.
No problem. Thank you. It's good that we move together. So of course, this is where audit comes in, because when you're reviewing such reports, such as a balance sheet, you're reviewing the income statement, all of which of course have been created internally through transaction recording and so on. Audit will provide a level of assurance that those records and those reports present a true and fair view of the business. And of course, at KKCO, this is one of the services we do provide. To many of, I know many of our clients are on the call, but for those of you on the call who may not have used our audit services, feel free to reach out so that we can engage. So financial reporting, of course, is underpinned by standards. It's underpinned by compliance requirements, just to make sure that we are all looking at the same data. Because if data is being entered into these books, entered into these journals, being collated and transposed into reports such as balance sheets and so on, we need to make sure that they follow, of course, the international financial reporting standards and generally accepted accounting principles, depending, of course, on the jurisdiction that that you are complying with, so that within those jurisdictions, everybody knows that a credit balance means this and a debit balance means that. And the entries that have led to that particular balance being created have followed the rules. So in a sense, there is standardization, and of course that way we can avoid the analogy of the blind man and the elephant, where one is holding the tail, the other is holding the leg, and we all are touching different parts of the elephant. But this way we make sure that we are all on the same page. So of course, once we have this kind of records, once we have these transactions, once we have built this data set, it enables us to forecast and to plan, because again, as I mentioned earlier, because we will become aware of where we've come from, we'll be aware of where we are, and that way we are able to determine in which direction we are moving, and then we can make educated guesses in terms of what the future will look like. So there is, of course, historical analysis combined with assumptions. Of course, things like all other things being held constant. We all have experienced budget making processes. Of course, for those of you in the PBO sector, budgeting is a very central role that you participate in, that is very data intensive and very detail oriented, which of course lends itself to the use of technology to enhance that particular process in terms of coming up with accurate data and accurate ways of forecasting the future. Just a side note that organizations with robust financial planning processes are 2.5 times more likely to achieve revenue growth in terms of targets compared to those with informal processes. So whereas we may both be doing the same thing in two different types of organizations, those who have a more robust process are more likely to succeed because you have captured a lot more detail. And when it comes to the whole AI in the enterprise, so those are some of the things that make a big difference, because the decisions you make at the early stage of data collection determine how much success you'll have in orchestrating or deploying AI within the organization. And it makes a big difference because where you have unstructured data, you may be looking at what is typically referred to as a data lake, where you just have data that is unrelated, is unstructured, it's disorganized, which you now want to organize into a warehouse. And then once you have a warehouse where basically, as you know, you have shelves, different warehouses will store different types of things. And you're able to now say this particular item is in warehouse X in shelf number Y, or in structure number Y on shelf number 4. And therefore you're able to leverage it in terms of information and converting that into knowledge. Of course, with the budgeting process, you now have the variance analysis phase, where you're looking back and measuring performance against what you had projected. And again, this becomes a very data intensive process. So this has led to, of course, the rise of business intelligence, where we are transforming financial data into insights. We're taking data from disparate sources. We are collating it. We are identifying relationships. We are carrying out advanced analytics, such as use of statistical methods. I remember with a lot of pain the differentiating equations that we were forced to do in school. But they did have value because they were able to establish and maintain relationships between entities. And of course, once those relationships have been documented, you're then able to visualize them through dashboards and various other presentation mechanisms, which is something I'll be revisiting as we go deeper into the session. But the whole point really is, how do we take the data? How do we take the information that we have gathered through our accounting operations, recording everything that happens within an organization from a financial perspective, and leverage that for decision support? And we'll see as we go along how this evolves into sustaining the business, making it profitable, or making it fit for purpose in terms of, especially in terms of the PBOs. And that's why, considering this the vast nature of this information, there are certain tools and techniques and technologies indeed that have a reason to address this need. So of course, from the basics, we started with T accounts. We moved with general ledgers. We created specialized journals for recurring transaction types. Of course, day books, which adds a time element. So you're saying these transactions happened on this day. We close the books, making sure everything balances, going from one day to the next. Of course, and this is fundamental record keeping. And this is where we always say garbage in, garbage out. If we are not keen on the integrity of the data that we are plugging into these tools and technologies, then what we'll get out is definitely something that will match in terms of quality. Then the spreadsheet, of course, revolution came around, and basically we were taking data and analyzing it in terms of rows and columns. Because, of course, as I mentioned earlier, you have transactions. Those transactions have attributes. Those attributes create fields, and those fields can be analyzed in terms of a spreadsheet. Of course, those became digitized in electronic formats. The rise of Excel, which we are still quite happy to use in this day and age. I remember the days of Lotus 123, which was quite powerful, and even at the time was considered superior to Excel. And that has evolved into other modern applications. You're talking about things like accounting systems that are able to take that data and warehouse it in a more structured format with definitely more fields. Of course, we are all aware of the limitations of spreadsheets in terms of the number of rows, the number of data types that it can handle, and so on. And ultimately, of course, the biggest drawback of Excel is that it's a flat file. Basically, you have a file that shows you a snapshot. But once you create an Excel sheet today, and then tomorrow the data has changed. So you have to change the data in that Excel sheet, and it becomes a whole new entity. And so it lacks that third dimension, basically, of motion over time. And this is where now you begin to look at the database systems that give you that element of a third dimension where you can maintain the integrity of time, the time effect on transactions. So once again, just touching on the evolution from basic accounting packages, you're talking about things like QuickBooks, Xero, FreshBooks, and of course, these are some of the tools that we are able to assist our clients to use. Of course, we have an outsourced accounting function as KKCO, where we onboard our clients on Xero and just help them to ensure that their record keeping is intact and has integrity. Because once again, it is the basis for decision making, and it needs to be of the highest quality. So at the elemental level, you'll find that these accounting packages are able to help you with transaction processing, GL management, and basic reporting, especially for small and medium organizations. The next level are mid-market solutions, where you're looking at slightly broader detail in terms of transactions. You're adding consolidation of multiple entities, for instance, in group accounting or consolidated accounts, some elements of advanced reporting, and possibly even industry-specific functionality, where you're saying if we treat certain transactions based on, of course, accounting standards within a certain industry a certain way, then you can customize the solution so that it creates efficiencies in that respect. Then, of course, you have the enterprise financial systems, what we usually refer to as ERPs and so on, that now explodes the functionalities to cover not only financial data, but attaches it to entities such as so a good example, for instance, if you're looking at sales. So whereas before you may just have a record of your sales, but then now you'll be saying, let's look at sales by salesperson. And then over and above that, you might start saying, let's look at sales by salesperson and sales by salesperson by region. So you begin to add other entities that may not necessarily be included in the financial data or accounting data. So it is financial data, but then it may not strictly be accounting data. And that's why you begin to see other modules. Financial management is the core. Then it incorporates supply chain. So you're talking about the purchasing cycle. So you have ordered goods. Where are they in terms of the delivery chain? You may not have received them. They may be in transit. How are you capturing that information? And of course, you're able to attach some real-time financial implication. Operations, you're looking at manufacturing, you're looking at project management. Especially in the case of PBOs, you may be in a situation where you have procured certain inputs or certain items that you need to supply to different locations. How is that process being managed? How are you managing the costs? You may have storage costs as you look at transitioning the items to their final beneficiaries. Of course, we have even educational institutions. You begin thinking about you have a cafeteria. How do you manage the costs of running that cafeteria? It may not be a core function in the sense of delivering education to the students who enroll in your university, but it nevertheless comes at a cost, and it's an ancillary service. So how do you capture the records, the transactions around those kind of operations? Of course, the revenue cycle is very key because that is the lifeblood. How do you acquire a customer, or how do you acquire a client from the time they come in as a lead to all the way when they become an account, and eventually, of course, when you get compensated for either the service you've provided, if it's a donor, when they send you the funds for the project and you disburse them. Of course, if it's a program that you're looking to set up, when the beneficiaries actually accrue the benefit that you're trying to render to them. And then, of course, you tie all this up with analytics to make sure that you're able to report at a very granular level, but also at a high level. Especially in the case of PBOs, we are talking about situations where you might have a multi-donor scenario, and you are faced with different reporting schema or the reporting standards, yet you're calling on the same data set. How do you now handle that advanced analytics? And I know this is the kind of stuff that keeps us in the office late, especially when we have deadlines. When we're trying to consolidate this data, doing sanity checks, checking the integrity, making sure that we are not misleading the users of such information. And of course, ultimately, this information needs to be aggregated in a way that can be consumed rapidly, especially considering that it is necessary for decision making. You do not want a situation where decisions are delayed because of the lack of dependable, solid data. And I know this is a situation that many of us find ourselves in, where reports delay and they delay decisions, and those decisions affect operations and they affect the ability of the organization to achieve its objective. So the holy grail, of course, is real-time financial monitoring, interactive analysis, where you're able to slice and dice, as they used to call it, the data, however the user would like, so that they're able to understand what the organization has been up to. And I mean, and also looking at comparatives, again, going back to the three-dimensional view, where you have transactions, their attributes, and then comparing them over time. I remember one of the clients I worked with, and they were in the business of selling soft drinks. And whereas, yes, they had the different stock units, they had the different brands, they had the different routes and clients and so on and so forth. But one of the data points they were layering on top of it was weather data. So of course they realized that their drinks would be, because their drinks were best served cold, they would do very well, especially when the weather was quite warm. But of course, once the weather changed and it became a bit cooler, then sales would drop accordingly. So they would factor that in when they were reporting their sales figures, so that they do not unrealistically expect sales to remain as high as they normally are during the hot season over the cold period. And that now informed their decision making and informed their operations and their operations planning, especially from the perspective that they would have to manufacture these particular products. So this brings us really to the point of AI and the revolution it has created in finance. And I know for a lot of us, we are concerned about things like not being relevant anymore, losing jobs, and so on. I'm happy to say that I don't think that will be the case for quite a while to go. And I will try to make that point over the next few slides as we move along. So how is AI impacting accounting, for instance? So of course, it is automating transaction detail, for instance, because by analyzing the data sets that we provide to it, it is able to sort of come up with recommendations of how data should be handled. So if, for instance, you receive some funding from a specific donor, and that funding needs to be applied based on a contract or based on a funding agreement, then the AI tool would be able to allocate those costs to those particular projects, or in those particular pathways that are predetermined by the contract that has been signed with the donor. And of course, this has been made possible through the use of large language models, where basically what we are saying is that the technology is now able to understand natural language. So it will be able to analyze the contract and understand the requirements of the contract and apply the requirements of those contracts to transactions. This, of course, is very useful because it ends up, it can enable us to detect situations of fraud or situations of misappropriation, or even wrongful treatment of records in the system, or transactions maybe being misclassified and so on. So it helps by, of course, removing the chance of errors. Again, because of just the large data sets that it is able to consume in a very short time, then it is able to create some predictive financial analytics by identifying patterns and predicting things like cash flow, and of course optimizing and making suggestions about working capital and so on. So it helps really with the next iteration, where not only is it looking at the data, but it is creating options for decision making, and that can be very useful. So what is the future really of data, and how do we evolve from silos to AI agents? Because in the current scenario, you have data sitting across the enterprise in files, in folders, in devices, in hard disks, in the cloud in some cases, actually in very many cases, in emails and so on. How do we break those silos and then make them accessible to AI agents to not manipulate, but to orchestrate into some valuable intelligence that can be used for decision making and possibly even action? So just a quick overview. I think I've mentioned data silos. We need to understand the challenges of dealing with isolated information systems. We really need to find ways of breaking down those barriers, and so that we are able to understand the relationships that exist between that data. Again, that leads us into the relational data and queries bit, where when now you're asking questions such as who is the best performing salesman? It's not just a situation of the one with the highest figure, but maybe we're saying the one with the highest figure and the largest, or rather, the one with the highest figure based on the area that they cover. So it now begins to add an element of nuance. And then, of course, being able to present this data in a way that is actionable, in a quick, in terms of turnaround, in a quick way, so we do not end up waiting for data, and by the time it comes, it's no longer relevant. I've touched on the large language models, basically leveraging on the ability of the technology to understand natural language, having been exposed to the data that we possess as an organization, and translating that into options or an element of knowledge, which can now be managed by the organization to achieve its objectives. We are now, of course, in the stage where agents are evolving at a very rapid rate. And what we mean by agents is where you actually have a level of autonomy. A good example is if you are, for instance, a PBO and you are seeking funding from a certain organization. If you make the requirements of that organization available to the AI tool, the AI tool would be able to now prepare a proposal, and over and above preparing the proposal, circulate that proposal, be it on email or whatever other communication platform, possibly even require some element of authentication or authorization, and then provide feedback based on maybe responses that you receive. So for instance, if you send your proposal, if it sends your proposal to the donor, and the donor agency has a similar tool on the other side, which is connected to the requirements that have been predetermined, it may actually carry out the assessment and send back feedback saying these are the areas that are deficient that need to be addressed. So you actually have a situation where machines are talking to one another and orchestrating without human intervention. Of course, we are all concerned about accuracy and so on, which I think I will be touching on later on, especially when you're talking about things like hallucinations and so on. So, what are the key challenges really that we face as organizations, especially when it comes to how data is siloed? Ultimately, we have a difficulty obtaining a unified view. We have redundancy in terms of storing the same kind of information in multiple formats, in multiple locations, and possibly it may lead to even coming up with errors by counting the same item more than once and so on. One big issue is inconsistent data formats, and this is one area that creates a challenge when you're transitioning to an AI-enabled enterprise, because your data really needs to be in a format that can be consumed by the AI, and secondly, it needs to be as granular as possible. And of course, it goes without saying that it needs to be clean. Of course, looking at relational data, looking at what are the mechanics of making sure that the data is in the format that is required. It is an investment. These are some of the tools that you would need to look at, especially if you're considering acquiring these services from a vendor. Making sure that your data is structured properly, making sure you've optimized any queries, making sure that your data is ready for integration, and of course, complying with all the standards therein. So it is a big investment, and it must be made very judiciously. Otherwise, you want to make sure that the benefit that is accruing is commensurate to the cost. Then, of course, making sure the presentation platforms that are used make sense to your users. This is very organization specific. And when you're engaging with whatever vendor you're thinking about, you need to keep this in mind, because you do not want presentation platforms that are overly complicated or difficult to fine tune, especially when you need to change them. But this again helps the organization to make critical decisions, turning the cash flow statement. So very often we provide cash flow statements to several users, and it is surprising how many people do not understand the implication of the cash flow statement, especially at the decision-making level. But if we are able to present to them this data in a way that they can consume, and they are able to realize, for instance, that if you do not do X, you will run out of money by a certain day, then that is able to spur action. I've touched on large language models and, of course, the transformative capability, because now, especially when you're dealing with agents, it means those agents can interact with users directly, either using speech or text, or even in some cases with some video interfaces and so on. This becomes very useful when you're dealing with especially customer-facing tools. I'm sure all of us have called a contact center at some point and been greeted by an automated voice. So that is one of the examples of AI agents. So finally, really, what does the frontier look like? We're looking at predictive analytics, we're looking at process automation, anomaly detection, and computer vision that and those are the tools that will take us into the future, where possibly we're thinking about how to modularize stakeholder engagement, shortening lead times for report preparation, lightening loads. When I say lightening loads, we are talking about situations where you may not necessarily have one big AI that is dealing with everything, but you may have broken down modules of the AI and the AI agents. So as I mentioned, you may have one for customer service, you may have one for HR, you may have one for project management, and so on. So what would a roadmap to implementing an AI setup in your organization look like? Of course, first and foremost, it needs to be suited to your particular domain. It needs to be aligned with your strategy to make sure that not only is it workable for your sector and industry, but it works for your specific organization and what it wants to achieve. You need to understand where you're at, what is the level of your data preparedness, of course, technology verification in terms of choosing which tools to use, because there are quite a number out there. We've all heard of DeepSeek, we've all heard of OpenAI and ChatGPT and so on and so forth. How do you know which one is right for you? And then, of course, you need some robust project management. And all of this is something that KKCO can help you with. I have touched on domain application. One important point to note is that based on your business type or your organization type, there'll be critical decisions that need to be made. Again, based on your specific organization, what are you trying to achieve? What is your at what stage in the life cycle is your business or your organization? And because as you allocate resources, they need to be used in a prudent way. When it comes to situational analysis, we'll be looking at things like what your current state is, any gaps that may exist, of course, taking on requirements from users, and then helping you design the solution. And then, as I mentioned earlier, validating the technology that you should use, helping you with vendor acquisition and engagement, and of course, contracting. Compliance and cybersecurity are very key because you don't want to be breaking data protection laws or exposing the organization to threats and threat actors. And of course, when the project management cycle kicks in, ensuring that you have assembled all the resources, you have applied them as is required, you're reviewing on a continuous basis that your milestones are being hit, and of course getting feedback to make sure that if there are improvements that can be made as you go along, you can make them before the final solution is in place. And then of course a post implementation assessment to make sure that you've achieved your goals. Excellent, Fred. I think we've gotten to the Q&A section. Are there any questions in the?
So thanks, Chris. I haven't seen questions, but I have a number of questions, even as we hope that any individual with a question can raise it for a response. I like that you talked about people not necessarily being fearful of the transition, the transformation of what this evolution is creating. Of course, it's not news right now because over the past few years, people have been adopting the use of, say, ChatGPTs and things like that. But this triggers an aspect of change which most people are really never ready for. Say, for example, security aspect. I think you mentioned things to do with data protection, the cost that must be catered for in the process of implementing all that. But in your experience, what are the biggest mindset or cultural shifts that organizations must make when transitioning from spreadsheets to smart tech solutions. That the culture mindsets that we think the organizations need to put in place, even as they try to drive that transformation, because change is not easy, and a lot of times you will find resistance. So maybe in your experience, what would you say?
Absolutely. For me, I think the biggest challenge is delayed decision making. So you find, for instance, I know many people will attend a webinar like this and they'll carry the message back to their organizations and say, this is something that we would like to implement. And the leadership or the decision makers would say, okay, fine, leave it with me. And then it drifts. Yet it is a very live issue. It is something that is game changing, and it is happening all around us, regardless of whether we are alive to it or not. So I find one of the biggest issues is delayed decision making. The other big issue is, just to touch on, is the quality of data. So very often, to save time, and as I was mentioning during the presentation, because of the delay in processing reports and so on, we end up summarizing, but we lose the granularity, which makes it difficult now to later on embrace AI.
So organizational or business leaders should make faster decisions that move in tandem with the speed of this transition. But also the quality of the data needs to be at a level that enables the AI platforms or agents, as you say, to be able to translate and interpret that for easier decision making, right?
Absolutely.
The other question that I had was, I know we have mid-sized firms, but of course those are also big in terms of budget. So for the mid-sized ones, which might be having limited budgets to begin the journey of that transition toward an AI-driven tools, how can these small and mid-sized organizations then begin that journey without overhauling everything all at once in the name of we are shifting to AI now that the world is moving that direction, so we must, but their cost and budget is really limited, especially even for donor funded who may not have the budget for that transition.
So I think it is a very pertinent point, of course, and that's why I was emphasizing you really need to assess where you are in your life cycle. You need to assess what your strategic intent and goal is, and then match it with the tools that you're going to deploy. The beauty is that a lot of the entry level applications, be it the QuickBooks, be it the Xero, have some element of AI being deployed. So you'll find that there are certain tools that can assist in terms of maybe you're talking about recurring invoicing, in terms of if you're talking about credit control. There are certain tools that you can run a process that will go through the system, pick out outstanding amounts from clients, and send notifications or letters or whatever them with some element of customized text, which is taking into account the context of that particular client. So let me just maybe give a quick example from a PBO, for instance. So if you're in a PBO and you have project officers and for instance, they are required to file reports on their projects by a certain time frame, and maybe you have a couple who have submitted but with issues, some who have submitted and they're fine, and some who haven't submitted altogether. With some of these AI tools and agents, the system can generate context-specific notifications for each of those officers, reminding them of their responsibility, and of course, again, picking out the specific contexts of each of them, and sending them those notifications for purposes of either follow-up or reporting, for that matter.
Okay, I think that can make it work. The other question I have was, so you talked about the quality of data, and I would like to just get an in-depth understanding of what that means, because quality has different interpretations. But you can also tie that with data governance. So what role does data governance play in ensuring that successful shift from manual systems to the AI-powered platforms?
So absolutely, and that's why when I was looking at this topic, and I was happy that you actually contextualized it from the spreadsheet to the AI revolution, because it requires that we capture as much information at the onset. And in some cases, even some data that we may not initially think is relevant, but we need to build with the future in mind. So when it comes to an issue of data governance, it means that you must do some element of data inventory, looking at what data you collect, how you collect it, how you collate it, in terms of attaching it to different other fields or different other data entities or data points, and carrying them along in a form that ensures data integrity. I think usually the simplest example I like to give is the cash receipt. So for very long, if you're running a cash business or a retail business, any customer who would come and pay, the receipt would just be made out to cash, and then an amount would be written there with a total and handed out, which really doesn't capture the necessary information of who provided, who the customer was in that particular setting. Maybe it would capture the date, but maybe the time would be useful as well, so that you're able to now later on say, if you're asking the AI what time of the day has the most sales, and you haven't captured the time of the transaction, then you'd have a gap. And I think this is critical, because especially when you're talking about hallucinations, this is how they form, where the AI looks at a data set, and based on the information that is required, if the data is not available, it makes something up, hence the hallucination.
I like the word hallucinations. I thought hallucinations only happen for humans, so it also happened for AI.
It happens for AI, yeah, absolutely.
Okay, maybe my last question, even as we come to a close, is when you look ahead, when you look into the future, which may not be 10 years from now, but even 2 months, even a month, even a year, how do you see AI reshaping traditional finance, HR, audit, generally accounting over the next, say, 1, 2, 3, 4, 5 years? And then how can organizations then position themselves to be able to keep up with that change, and of course mitigate mistakes or risks that are potentially anticipated?
Well, I see, especially with deployment of AI, definitely a decline in terms of anomalies or mistakes, because if you set it up properly, then you should be able to literally almost eliminate data entry mistakes because they'll be captured at a high rate. In terms of how people leverage them, again, I think the mundane will sort of disappear. So things like sending out customer statements or sending out reports will become a much simpler task, especially if you set up your implementation properly. Then it means the system will be able to pick up the necessary data and share it in a timely fashion. So I think definitely time sensitivity and time sensitive tasks will happen quite quickly. Of course, there are going to be challenges of adoption, especially dealing with stakeholders outside the organization. There'll be a need for a lot of sensitization, and that needs to be designed and executed very carefully. You don't just want to dump a new way of doing things. Actually, even internally with the organization, the users who participate in creating this data need to be sensitized in a fashion that makes a lot of sense. And then also ultimately for accountants and other professionals, it just means leveling up in terms of their game, because now you begin to actually for me, I have longed for this kind of situation where accountants and finance people begin to provide a lot more value in terms of the interpretation of the data, as opposed to just giving you a figure and not giving the context of that data. But if we can move to that, the holy grail where a lot of business leaders say the finance department needs to be to show leadership in terms of guiding decision making, as opposed to just being a reporter.
Okay. Like the word not dumping, or that entire evolution into people at once, because at some point those people are the ones who have to implement it at the end of the day.
Absolutely.
So Elizabeth is asking whether we still see spreadsheets, despite being flat, still being needed and used in this AI revolution.
I am personally.
We just throw it out.
I am a proponent of retooling spreadsheets for other purposes, because as I said, for me it loses out on that third dimension, because and I always see this, especially when we're doing board reports of that nature. So you'll find, as you prepare for a board meeting, you send out a spreadsheet that has certain data. Maybe somebody in the audit committee queries a figure. It goes back, it is recrunched, and eventually a second spreadsheet is sent out. But you notice now the two spreadsheets have different data within them, yet depending on who's looking at it at what time, they may be misled. So personally, I think the utility of the spreadsheet would move lower in the organization and be replaced by more advanced tools. It may be useful for simplified presentation. So for instance, if you're extracting data from a system and you just simply want to present it at that particular juncture, and for whatever reason the best platform is a spreadsheet, then that's fine. But yeah, I would say it's purely as a presentation tool, and even then in a very narrow situation.
Good. So VLOOKUP would still be in use, whether it's downgraded or upgraded, whether evolution of AI is here or not. At some point, Elizabeth has to still understand what VLOOKUP is on the spreadsheet.
No, but you see, I will push back on that, because the reason we're doing VLOOKUP is because the quality of the data that was created in the first place did not meet the standards of the user who's trying to do the VLOOKUP. And
Okay.
basically what you're saying is you're trying to establish what the relationships are.
Okay.
And yeah, so yeah, I think for me the clock is ticking.
Okay. All right. So Yvette, we of course can customize a walkthrough for your team, data analytics training. Chris is available to be able to facilitate that process. So we can have a conversation afterwards to just see how then do we support you in that process of just simplifying your data for ease of decision making for your management team. Chris, I think that brings us to a close of today, and really happy to have had your insights. And I think let me just let everybody, ladies and gentlemen, so thank you very much for the session today. On behalf of KTC East Africa and the team, I want to extend our sincere thanks to each of you for taking the time to join us. And most importantly, to our speaker, Chris, who has shared with us really breakthroughs in AI and what then organizations need to do to position themselves in the next few years. It's a complex topic. If you ask me, I wouldn't necessarily be able to do what she's done. But I guess the clarity, the experience, and the practical insights that he's put together has been able to help us understand a little bit some things. And it's really obvious that 1 hour is not it's not enough to exhaust much of what we could have desired. But these are just snippets of which then if you need an in-depth conversation around this, please reach out. We are happy to put together something for you and your team. So from today's discussion, it's clear that AI and the smart technologies are no longer futuristic buzzwords. They are redefining how we work, how we make decisions, how we drive value across every function, and the shift from spreadsheets to smart platforms isn't just about tools. It's about rethinking how we approach problem solving and efficiency. As you go back to organizations, I think I just want to encourage us to reflect to where your processes might be stuck in manual modes and explore ways to gradually adopt smarter tech solutions and champion a mindset that embraces innovation and not just mere automation. We will be sharing the webinar recording and any related resources shortly. Job just to put that into part of the work we can do today or tomorrow. We probably refine 1 or 2 aspects and then share the notes, share the recording. If you have any further questions or would like to continue the conversation, feel free to reach out to us. Once again, thank you all for your participation and have yourselves a very great day ahead. Good. Thank you very much.